To Egypt, inflation has accelerated. It's the highest level since April, increasing the chances that the central bank keeps interest rates unchanged this month. That as the nation is set to start registering vaccination requests this week after receiving the first shipments of a Sinopharm shot. Joining me now, it is Alia Mamdouh. She's the chief economist at Beltone Financial. Alia, great to have you with us this morning. What does the vaccine mean to your economic models for 2021? Good morning.
Good morning. How are you? Actually, for Egypt, the vaccine would trigger the dormant services and tourism sector, which has been the most affected sector in Egypt, and the key one of the key revenue of the FX, one of the key FX revenue streams to the country. Current account has widened to a great extent over the past year, and we expect this year, without the vaccine being, without the viability of a vaccine that will trigger back international tourism activities, would continue to weigh on our external balances. So that might be a positive, very positive news for Egypt and for the retail and services sector that has been affected to a great extent.
So this is going to play out in a whole variety of ways, but let's talk with a macro top-line brush, because I look at the inflation data for Egypt. There's a 7-month high. Is that idiosyncratic, or is that something that if it is idiosyncratic, does that still cause a pause for the bank, the central bank, on its decision-making on December the 24th? Do we go into a hold pattern to see whether it is slightly more than just a one-off?
I guess it has more to do with the base effect dynamics impacting the rates. And we expect slightly a trend of elevated inflation to be apparent in December, with the seasonality in spending over the Christmas and other holidays. I guess that would give a breather for the central bank to hold on interest rates in December 24th meeting. And we see a muted increase in inflation over the first half of 2021 that might trigger another 100 bips cut throughout the year in order to support economic activities. However, if things return back to normal sooner than expected, we might expect a hold on the current monetary expansionary policy until the end of 2022.
Now, look, your base case scenario, Alia, tying that monetary policy outlook to the pound is for a stronger pound. But what are the risks to that? What are the levels that you're looking at in terms of appreciation on the pound? And what are the biggest risks?
I guess the current monetary policy does not really influence the pound stability, because it has to do with the yields on the government treasuries that has triggered a lot of portfolio investments in Egypt supporting the pound over the past year, despite the cut or the hit to the tourism activities and to the export performance as well. We believe more of a stronger pound over the coming, let's say, year or two, supported by the short-term continued inflows in portfolio investments, with yields maintaining their elevated level to the benchmark interest rates. On the other hand, as the balance of payment operations, or as the external revenues start to come back to normal or normalized in terms of transfers of Egyptians working abroad and exports as well, with the pickup in oil prices and tourism back on track, I think that would lend a hand to portfolio investments in providing the stability of the pound. We're expecting the pound to maintain its current range of 15.5 to 15.7 per US dollars.
Now, I just want to turn to your report in terms of the mean and macro strategy for 2021. You suggest that the impact that we've taken in the equity market is a one-off hit, and you look at the portfolio construct as being 15 top picks out of 88. So what industries are those in? I mean, you're coming up with some pretty amazing numbers in terms of bounce back, average upside of 49% on the EPS, and 49% growth in the earnings per share, and a growth of 36%. So what areas are you most interested in?
Our portfolio just covers a lot of sectors, or mainly most of the sectors, because we've seen the initiatives or the measures provided or stimulus provided by the governments in all of the markets that we cover had been very positive on equities, and it lended a hand to many of the corporates to pass the 2020 challenges, particularly with the remove of the interest burden on most of the corporates. Their bottom lines have been supported to a great extent with the introduced interest rate cuts by almost all central banks. Most of the sectors that we're positive on were in Egypt goes for the industrials, and particularly that's with a promised or expected another wave of measures that will support the sector, including a cut in natural gas prices and other specific triggers for each and every stock. We have on our list names in the education sector and in the consumer sector as well, and the non-bank finance. We see a great room for growth in the non-bank finance sector with back to normal business activity and consumption behavior.
Alia, thank you so much. Alia Mamdouh, Chief Economist at Beltone Financial. Thanks for getting up extra early for us.